The stock market is where fortunes are made and lost based on information you do not have. A billionaire reads a confidential earnings report before it becomes public. An algorithm processes market data in milliseconds. A CEO knows their company is about to collapse before anyone else, and every single one of them has an advantage over you. You probably know this. What you might not know is that the stock market has spent decades building an entire infrastructure designed to make you think these advantages do not matter, that you can still win, that everyone has a fair shot. They are lying. Here is why this matters right now. The stock market is not some abstract thing happening in glass towers far away from your life. If you have a retirement account, a 401k, a brokerage app on your phone, then you are already in the stock market. You are already playing a game where the rules are rigged. Most people do not understand what they are participating in. They know stocks go up and down. They know they are supposed to buy low and sell high. They know they are supposed to hold long term and not panic, but they don't actually understand the mechanism beneath those platitudes. Let us start with the basic structure. A stock is a piece of ownership in a company. You own a small fraction. The company is worth something. Your fraction is worth something. The company makes money or loses money. Your fraction rises or falls in value. This sounds simple, and mechanically it is. But here's where it gets interesting. The price of a stock has almost nothing to do with the actual value of the company. Price is determined by what people think the company is worth, and people think weird things. In 2000, during the dot-com bubble, companies that had never made $1 of profit and no realistic path to profitability were valued at billions of dollars. The prices were not based on reality. They were based on hope and fear and herd instinct. When reality reasserted itself, those companies lost 90% of their value. People who bought near the peak held stocks that were essentially worthless. Years of wealth evaporated in months. Now, here is the uncomfortable mechanism. Stock prices move based on two things. One is real, one is not. The real thing is fundamentals. Does the company make money? Is it growing? Does it have a competitive advantage? These things matter for long-term value. The unreal thing is sentiment. Is everyone excited about the stock right now? Are people buying it? Is the media covering it? Are influencers talking about it? Sentiment moves fast. Fundamentals move slow. For most of the time, most people are trading stocks. Sentiment is the only thing that matters. This creates a perverse system. A company can have terrible fundamentals but rising sentiment and still see its stock go up. A company can have great fundamentals but falling sentiment and still see its stock go down. Price becomes disconnected from value. Here's who wins in this system. Information advantages are everything. If you know something before everyone else knows it, you can make money from that asymmetry. Executives know their company's earnings before earnings announcements. Institutional investors have teams of analysts digging into details retail investors never see. Hedge funds have algorithms that process data faster than humans can think. Market makers have access to order flow information that gives them fractional second advantages. And you have a brokerage app and an internet connection. The system has built safeguards, supposedly. Insider trading is illegal. Front-running is illegal. But enforcement is weak, and the penalties are small compared to the profits. A hedge fund makes billions on information asymmetry. If they get caught, they pay millions in fines. The math is still favorable. The stock market has convinced everyone that this is fine. It has created the mythology that the average person can beat professional investors, that you just have to pick the right stocks, that you just have to be smart enough. But the data is clear. Most retail investors underperform the market. Most professional investors underperform the market. The only consistent winners are those with information advantages or structural advantages, or both. Yet millions of people still try. They read earnings reports they do not understand. They follow YouTube analysts they do not know. They time their trades based on Reddit threads written by anonymous people. They feel like they're doing research. They feel like they're making informed decisions. They are not. They are guessing. And they are guessing against people with vastly superior information and faster execution. So why does anyone participate? Because the system shows you the winners. Every news story about the retail trader who turned $5,000 into $500,000. Every social media post from someone who got rich from stocks. Every culture message that says you can do it if you just try hard enough. What you do not see is the story of the person who turned $5,000 into $500,000. The person who followed a tip from someone online and lost their down payment money. The person who got lucky once and then lost everything, betting that luck would repeat. For every visible winner, there are dozens of invisible losers. The system counts on you not seeing the losers. Here's the uncomfortable question. If most people lose money, if information asymmetries are fundamental to how the market works, if sentiment moves stocks more than fundamentals, if the system is rigged in favor of those with advantages you do not have, why are you participating? The honest answer for most people is they feel like they have to. The stock market is presented as the only viable path to wealth building. Retirement depends on it. Escape from financial pressure depends on it. So you participate even though you know the odds are against you. You play a game where the house has the advantage and always has. The stock market works. It efficiently distributes capital. It discovers prices. It creates price discovery mechanisms. But it does not work for you. It works for those with advantages, and the really uncomfortable part is knowing that and playing anyway.